Hi everyone, Ron Milligan with Remax Select here, and what I have for you today is probably the best video that I put out because it really puts our market statistics into context. So sometimes it's hard to look at the market stats that we put out and make sense of what where we are, where it's going. And this is one of those videos where I look back and graph out the last 15 years of our market under various segments and metrics that we measure. So without a lot of introduction, let's just get into it and look at the very first one that we have here, which is what I always like to look at, which is the supply side of the supply and demand equation. So how many active listings do we have available for buyers to purchase? And if you look at this chart, and these charts are for the statistics ending the month of October. So those statistics just came out from RMLS, which is what prompted me to do this. So we're looking at the end of November, just in Portland Metro. So Portland proper, none of the suburbs, not Southwest Washington. So the numbers will be a little bit off compared to the sampling that we do in our office week after week. So here, take a look at the active listings. We're at 4,753 at the end of October. So that's 4,753 listings available for buyers to purchase, not under contract, they're active and available. And when we look back over the 15 years here, we're still at, even as bad as it is compared to last year and 2020, we're still sitting with the third lowest inventory of available listings over the past 15 years. So only 21 and 2020 were years where we had less inventory in the month of October. And you look in the middle here, kind of that 15, 16, 17, 2014, those were the closest thing we had probably to normal markets. These were all really seller's advantage markets still, but they're the closest thing that we've had to kind of that balanced market, neither a buyer's nor seller's market. And get into 2010, 2009, 2008. Those are crazy buyer's advantage markets where we had tons of listings. 16,257 back in October of 2008, and not a lot of buyers. Appreciation, so the way that this is calculated is by looking at the 12 most recent months and averaging the sale prices for every home that's sold in the 12 most recent months, and then compare that to the previous 12 months. So this number is going to look higher than what we've been feeling. At the end of October, we're looking at 8.3% appreciation, 12 most recent months compared to the previous 12 months. And we're not doing too bad if we're just looking at that figure. Those of you who've been watching the weekly updates, you know that number right now is pretty low. Like this last week, it was 0.4% higher comparing the week to the week. So just the most recent week to roughly that same time period last year, there's only a 0.4% increase in the average sale price. Previous 3 or 4 weeks, we've been around like 2.4 to about 5%, kind of jumping around in those areas. So this 8.3% at the end of October is going to feel a little bit higher. That's just because it's a 12-month rolling comparison compared to the previous 12 months. If we're doing those real short-term ones, or just comparing the month of October this year to the month of October last year, that number is under 5%. So inventory in months, which is a measure of both buyer demand and supply. So given no new inventory, how long would it take to sell every single active listing on the market at the current rate of sales? So in this figure, the thing to bear in mind is that a balanced market, neither a seller's nor buyer's advantage market, is somewhere between 4 to 6 months of inventory. Analysts disagree on that. Traditionally, it used to be 6 months of inventory was neither a buyer's nor seller's market. You went above that, that was a buyer's advantage market. Below that's a seller's advantage market. But most analysts these days are talking about 4%. I've even seen a couple say 3% is a balanced market. So you can see here, if we're looking at that 4% as the balance market number, The last time we got close to that number was back in October of 2012. And that was when a lot of folks, analysts, thought was the bottom of our real estate market. And then, of course, if we go back to 2011, then we're above that 6-month mark, which is a buyer's advantage market. So we're still not doing too poorly, even with the really weak buyer demand that we've been experiencing, weak in the context of this year versus last year and 2020. So days on market, this is just how long a property sat on the market before it received an offer that ended up, that it had an offer accepted on it, and that buyer actually ended up purchasing the property. So 38, we're tied with 2020. So this is the second lowest days on market for sellers to sell their homes over the last 15 years. Only 2021 was lower, of course, and then we get back to the crazy years of 8, 9, 10, and 11. We're at 130 plus days on market before anyone got an offer, and that's, of course, on average. The numbers of closed sales, this is where we start to look a little weak because we haven't had a lot of closings this month. We're at 1955, and that puts us below what we're pointing to or looking at as more balanced markets, so that 13, 14, 15, 16, 17, 18, 2019, all of those years had better closed sales for the month of October. So numbers are definitely lower here, but keep in mind that what we're dealing with today is this an interest rate environment that is way above anything that we saw certainly on this chart. I think going back to 7, 8, 9, 10, we might have had rates kind of in the 6s, but they were not in the 7s. So this is a different set of factors, which explains why we have this low number of sales for the month of October there. New listings are still pretty low. We haven't seen a lot of listings hit the market. For the number of listings hitting the market, it looks like there are only 2 other months going back over this 15 years that saw fewer new listings hit the market. And this is a market where a lot of folks are, have a lot of equity to protect in their homes, and maybe aren't feeling the need to sell like they were in down markets like in 8, 9, and 10. Or 2007. There was a lot of new listings in 2007 in October. So they're just kind of sitting on their properties until the market changes, or they're entering the rental market and enjoying that crazy tight rental market that we've been experiencing in the metro area. New pending sales. So this is another one, a measure of buyer demand, still really low here. To get numbers this low, we have to go back to about 2011. Everything else since then has been in higher demand, but again, we're talking about lower rate environments for the rest of those years. So that's what I have for you today. If you have any questions about what we saw, or would have any thoughts, or have any information of your own that you'd like to share, I would love to see it. Please feel free to throw something down in the comments below, or reach out to me however you like to communicate, call, text, or email. And as always, I'd love a thumbs up, a subscribe would be awesome, or share this information with someone who might be a little panicky about what's going on in the real estate market. Just share this link to with them, and maybe this will help them out and give them a little bit of context. And thank you for watching the video to the very end. I do appreciate that, and we'll see you soon.